Hello, this is Cynthia Fick, and this is the September 16th stock market update. Well, we have some big news coming out tomorrow. The Federal Reserve's meeting, and the Wall Street seems to believe that they're going to lower interest rates by at least 25 basis points. So that's kind of already built into the market. And there's also right now thought to be a pretty high chance they may lower two more times, maybe once the rest of this year and once next year. So I guess the question becomes, how historically has the stock market reacted when we're in an expansion in the market and the Federal Reserve starts to lower interest rates? Let's look at a chart that shows us what the last times that's happened have done. Okay, so this shows us when the Federal Reserve starts lowering interest rates and we're already in an expansion, what happens in the stock market historically. And this is a Sources Fund Strat. So it's January 71, October 84, October 87, July 89, July 95, and then September 98. So we can see that when they start to lower interest rates, here's how the market is done in the 1 week time frame, 1 month, 3 months, 6 months, 9 months, and 12 months. So bottom line is the stock market is in general does pretty well. These are just averages of when the Federal Reserve starts to cut interest rates and we're in an expansion. I also want to remind you earlier in the year, this was on April 24th, after we had the big pullback in early April, which brought us to the worst consumer and investor sentiment in 30 years. We had something called a Zweig breadth thrust, just meaning, bottom line, a lot of stocks going up on very high volume. It's kind of a broadening out of the market. It is very, very rare. It's only happened maybe 14 times since 1950. So what happens in the market on average after the breadth thrust? So it shows you again, 17 days later, up 4.4%, an average of 21 days later, 5.1%, and so on and so forth. 252 days later, on average, we're not sure right now, but the averages have been 23.8%. So in general, there's been a lot of, as we discussed before, a lot of you are nervous about the market. We're at all-time highs. And again, remember, if the market's doing well, we're always going to be at a new high. There's been 56 new highs over the last year and a half. What is driving this market? And why am I suggesting that we keep an open mind to it doing a little better than we think it might? We're in the middle of an industrial revolution 2.0 that is brought on by artificial intelligence. And we, don't always know exactly how that's going to affect our lives, businesses. But so far, it looks like it's been a net positive. It can help save companies money, make them more productive, more efficient. And that is just leading to a lot of companies' earnings are coming out even better than expected. And this can lead to something that is, maybe even a little bit better than we're thinking. Of course, my belief is there is going to be volatility. It's not going to be a straight shot up, and we don't want it to be a straight shot up. We want it to just 2 steps forward, half step back. We're going to have our normal, healthy, to be expected pullbacks. There's 5% pullbacks 3 times a year. There's a 10% pullback almost every year. So these things happen. We've already had almost a 20% pullback earlier in the year. So these things are going to happen, but let's not let the fear of that get in the way of long-term wealth creation in the stock market. Again, if something changes with the current picture, what the market is showing us it wants to do, we will, make different thoughts and suggestions. But right now, the market is showing us right now that it wants to go up. And so that is Financial Life Planner's thoughts on what could happen in the stock market after the Fed starts to lower interest rates. Hope you're well, and we will talk to you next Tuesday. Have a good one. Bye.